Hello and welcome to Phillip's CFD Educational Web Series. My name is Alice and today we'll be going through a short lesson on how CFD work. Once again, before we start, I would like to remind you that the information provided today are meant for educational purposes. So let's jump in. I'm pretty sure most of you have gone through our previous lesson and know a little thing or two about CFDs. Today, we'll be going through two very simple items. Firstly, I'll be explaining how we can place a CFD contract, and next, I'll be going through with you the different processes a trade goes through after you have placed an order with us. Let us go through the very first part of today's lesson, placing a CFD trade. There are two types of orders you can place in CFD. First is the buy order. Buying is to basically go long in a contract, and that is to predict that the price of a share or index will increase over a certain period of time. Alternatively, we can sell. Selling is to go short in a contract, and that is to predict that the price of a share or index will fall over a period of time. In CFD trading, we will not see buy or sell in the price list or charts. Instead, we will see CFD bid and CFD ask prices. Therefore, to buy, you can only buy or go long on the ask price. To sell, you can only sell or go short on the CFD bid price. In case you are confused, I have a little trick to remember this by. Just remember that whenever you want to buy something, you ask for its price. And when you want to sell something, you will naturally bid it for the highest price. And now, we'll proceed on to the next part of our lesson, which is processing a trade. A CFD is essentially a contractual agreement between two parties, and in this case, it will be you, the client, and us, the brokerage house. Let us explore what happens when you place that trade with us. There are two different types of orders that you can place with us. You can either place an order at the current market price or a limit order. Let us begin with market orders. Imagine we place a buy trade. This trade order will be received by our system. Pre-execution checks are performed on account status, fund sufficiency, and many others. Once this round passes through, your order will be routed to the CFD hedging desk for processing. This order will be subjected to risk management checks, and once this passes through once again, it would then be filled once PSPL is able to hedge its exposure. Moving on to limit orders. In a limit order, the similar check occurs, but at the very last step. Instead of filling the order, it will be queued into the CFD system first. When the bid or ask prices matches the sell-buy order respectively, the order is routed to CFD hedging desk for a fill, and it will then be filled once PSPL is able to hedge its exposure. Now, let us do a recap of what we have learned today. There are two methods of trades in CFD, to buy and to sell. When we buy, we'll buy at ask price, sell at bid price. We have also learned the processes of a CFD order. I hope you have enjoyed this session. Tune in to our next topic, types of CFDs.